joining me now for some comments is Richard Perks. He's Director of Retail Research at Mintel. Thank you so much for coming. Richard, all right, so we've had snow. People haven't been shopping, but have they been buying online? Is there a shift in saying, oh, don't want to go out there because I'll get wet, but I'll go on my computer?
I'm sure there has. But remember that online is still a relatively small share of all retail sales. I mean, it's under 10%, easily under 10%. And a lot of what you do get online is through the websites of stores and existing catalogue retailers, so very little of it's actually pure play. Yes, there may have been a switch. It's going to be interesting to see how many people are disappointed and what sort of knock-on effect that has next year. And
in terms of what you're expecting for today and tomorrow, are we going to catch up the lost sales?
No, it's
so
just
what,
not possible
presents?
now.
People are just going to say, well, you know, I love you, forget the present.
Well, yeah, you can have cash this year, whatever. Yeah, I'm sure there's some of that. I just don't think it's physically possible to make up everything. I mean, we tend to forecast sales for December and call that Christmas, so there's a lot of just routine buying which was lost in those first 3 weeks of December. There must have been because of the weather. OK, present buy may not have suffered quite so much because there has been the opportunity to pick up some of that. But even so, it's too late to pick up the lost. And I think December is going to turn out to have been a very difficult month indeed.
But Richard, how much does this have to do actually with snow and people not being able to get out? And how does it have to do with actually, I'm not sure what I'm going to earn next year, I'm not sure about the austerity measures and people just being scared to spend?
I think it's everything to do with snow. The retail sales right the way through to the end of November were remarkably strong, really very strong indeed, far, far stronger than we expected. There was absolutely no sense that consumers were cutting back at all. Every reason why they should have been, you know, their incomes were being squeezed. You could see that there were problems coming next year, but I think they just felt, well, we're okay at the moment. Just save a bit less and keep the spending going. I think the outlook for next year is very difficult for all those reasons. But I think we would have had a very good Christmas indeed had it not been for the weather.
So we're going to have great sales. Margins are going to be squeezed?
I think that retailers went into this Christmas season very, very cautiously. I would guess that they would have been short of stock if we'd had the sort of demand that we looked as if we were heading for. So yes, I think the sales may be better than they would otherwise have been. I don't think they're going to be that great.
How concerned are you about rising, you know, the rising cost of cotton, about all of these? No?
Yes, I mean, it's a serious impact. We haven't had any inflation in clothing for, what's it, 15, 20 years? So something phenomenal. And prices are definitely going up, and they're going to go up more in the new year. We know that. And it's going to come at a time when there's a lot of pressure on spending as well.
What retailers do you like?
You know, I think Marks & Spencer's probably. I mean, I'm not making stock price recommendations, but I just like the way that Marks really seems to have repositioned itself and seems to be, have got that momentum behind it. What a pity the Christmas has been so bad. John Lewis, obviously, has bucked the trend completely and is doing phenomenally well.
Because you know what you get, actually. It's the retailers that you can identify with what they sell, I guess, that sell the most.
But it's so much more than that because they've really taken a hold of that business and turned it round. They've almost invented their fashion offer in John Lewis, and they've done a terrific job there.
Richard, thank you so much. Richard Perks there. Well,